Dino, what do you think is going to happen with the market and the economy next year?
If anyone says that they know, no one knows. Okay, it's one thing I always say in the market is the market's going to tell you what's going to do. So, economy-wise, okay, the market isn't the economy. Okay, so let's break it out. Okay, there's differences that's happening in the market. Like, you know, they say Wall Street, Main Street, right? Wall Street isn't Main Street isn't Wall Street, right? From a market perspective, the market's been going freaking crazy for the last, let's look at the NASDAQ, right? It's been going up, which is ridiculous. It's never seen this much of an uptrend on all different indices for this sustained amount of time. So obviously it's going to consolidate. Whether it's going to, now the question is what happens to the economy will affect what affects the market in terms of how much down is it going to go? Is when we say it's going to consolidate, is this going to go like that, right? From a market perspective, I think there's going to be a pullback. There has to be a pullback on all indices. It's just been going through a crazy run. Santa Claus rally, right? But for the economy, it's hard to say because you got inflation coming down, right? Now again, this is it's a reduction in inflation. It's disinflation, not deflation. Okay, two different things. So if there's disinflation, prices are coming down. Gas prices came down. No doubt, things are still expensive. Okay, but here's the kicker to what I see. All the estimates from corporations is positive going in, which tells me what, right? You're not going to see your prices coming down. The prices may not be increasing the way it has been the last year and a half, but it may be stabilizing, but forget about it coming down. So that means what? That means Main Street. That means consumers, everyone, they're still going to pay high prices for stuff, except the prices are not going to be inflating month over month, quarter over quarter, right? So things are still going to be relatively expensive. Why? The wage growth has slowed down. So your salaries, the money you make, hasn't caught up with the prices yet. So things are going to still feel expensive. But when corporations say their earnings are still going to be good, they're thinking there's not going to be a slowdown. Is there going to be a slowdown, a recession? Jobs are contracting, but they're not negative. Job losses are up, but they're not to a point where unemployment is rising. So I think the key question is, you know, how does everybody feel? Is everybody scared about losing their jobs? What's their situation, right? So as long as we don't lose jobs in an accelerated way, the economy is going to become what you hear is a soft landing. A hard landing means recession, you know, and it's just nomenclature. It's just like what people say, right? What you got to watch out for is the next jobs report. Now, inflation we know is coming down. Again, not deflation, but disinflation. The rate of prices increasing is the graph is flattening, right? Interest rates are coming down. So here's the other big thing, right? The Fed says they forecast 3 rate cuts for the year. Now, obviously, the market's crazy thinking the first one's going to come in January or March. I don't see that because what people need to understand is all the people cheering for rates coming down. If the rates drop steeply, what does that mean? That means you've got job losses. That means what? Recession's coming. How can that be a good thing? So it's kind of funky right now. It looks like the data looks like they've pulled it off. That means they were able to slow the economy down, slow down GDP, which is the forecast for next year, quarter to quarter, but not create this dip where people start losing jobs, and then once you start losing jobs, it's like a snowball effect. You can't pull that back really quickly. I think what the Fed has to do is they're worried that might happen, right? So they may start dropping rates to soften that blow. But I don't know. You hear both sides from all sorts of people, all sorts of smart people out there. We don't know. It looks like it's slowing down. To me, it's going to slow down. But you hope that it's not going to cost people a lot of job losses where the Fed has to really bring the rates down. Because for all the people in the market, if the Fed starts dropping rates, that means the economy is slowing down. And believe me, it's not good for the market either. So that's what I think. Kind of complicated.
Got it.